investors.
The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here for this Tiger Technicians Hour on Friday the 6th, and we're looking at the Dow up 234, S&P's up 25. I just want to show you this E-mini chart. Look at this big spike here on the news, on the economic news. It was interpreted initially as very positive, and then it pulled back sharply, and it made this inverted Chapman wave Roman candle a green one. And the rule of thumb is that long wick, in this case at the top, says that if you, in a shorter time frame, can close above the midpoint of the wick, in other words, in this case, 38.60, then there's a really good chance that you're going to go towards just under, right on, or just above the high that was made. In this case, the E-mini high was 3874.00 at 8:31, a very quick 1 minute spike. Well, look what we did. We ran peak A, peak B, peak C, D, E, right to a double top at 3876.25. That is 1.5 points or so above that previous high. And then it went in a stalling motion, made a kind of a bowl, a cup formation. This is the 1 minute E-mini chart. And what happened? It retested underneath the previous high. Rule of thumb is in this rectangle type formation. If you take out halfway of the long, elongated, extended, narrow rectangle formation, there's a good chance not only will you test the bottom of the rectangle, but you could take it out and do a one-to-one to the downside. Well, it did exactly that. And now it's walking the 9-period exponential moving average to the upside. And you can see the stochastic turned up, the unbalanced volume turned up, the MACD turned up. The 9-period took a little while. Eventually it turned green, and here it is green. And it's running quite nicely up 31.50 at 38.61. We'll keep an eye on this, because if this succeeds in going sharply above the peak D that was made, it'll retest the highs of 38.75, and we're going to be watching this very closely. Now, the reason why I wanted to show you this, look at this long, elongated rectangle formation. And my rule of thumb has always been, in a rectangle formation, let me show you this one here. Going from 6:30 this morning, when we came back and retested the arch formation high to peak E, it went sideways for an extended period of time. It went sideways basically between 38.31 in the E-mini and 38.27, 26. And then it broke below it. And look at this. This is going from let's call it 6:30. 6:30 until almost 8 o'clock before it broke down. Remember, the rule of thumb for me always is, there are two kinds of rectangles. Let me just show you this in my work here. Let me get out of that. I don't need it right now. Yeah. So in the chart formations, one of the characteristics we look for in the patterns is that an extended, long, narrow rectangle formation can last a lot longer in your patience. Invariably, there's a pop to the upside, a momentary pop to the upside, and that's often a peak D, E, or F. And if it turns the fourth, fifth, or sixth highest peak, if it comes back, takes out the midpoint of the rectangle, there's a really good chance not only will you test the low of the rectangle, but you'll take it out. Large rectangle has a different formation. Maybe we'll see some charts a little later on that really professes to show that demonstrated. All right, now let's go back to this. So what happened is you had this long rectangle formation, broke under it, had the big spike, tested with inverted Chapman wave Roman candle, and then broke above it, but just above it. Remember, that's the rule of thumb with the Roman candle. And basically, a Roman candle has a tiny little wick, and then a very strong move up or down, and then closes halfway to 3/4 from the long wick, the reverse, so that you get a big green body, but it's smaller than the wick itself by, it's either half or a little greater than half. And then what happens is, like a Roman candle, you light it and and this is exactly what happens. So we've got ourselves an E-mini that's trying to extend high. Now, a reason why I wanted to show you this is that, so we've gone to now a new leg E, and we just start walking the 9-period moving average quite nicely. We'll see how long this lasts. Now, one of the reasons why I say to subscribers, if the Dow, in particular, this is using the inverse, this is using the 3 times long Dow. If it went above a certain level after 8:30 this morning, we want to be long. We had a very tight stop. Because I needed to get it out before 8:30, it got out at about 8:17, gave you quite a bit of time to actually prepare for the trade. I didn't even have time to say that if it does a certain thing, raise the stop to at least break even. And the more I thought about it, I said, well, this is what I'm really looking at. The only reason why this is a shorter term, a very near term position, is that in the pattern that I'm looking at now, I can draw it. And I didn't want to draw it before because it can be kind of messy. You see, this is what I show subscribers every day. I do an analysis on the Dow, tell you what I'm looking for, why I'm looking for it. This rectangle formation has a number of things going for it. Oh, maybe I'll do it here. Let me just do it here. So this is going to be Technical Friday. We're going to be going through a bunch of patterns. So you see this pattern right here with that peak D on December the 1st, and the technicals were all very strong. When it got to the peak E at leg E at 34.712 on the 13th, slightly higher than the left side high. Look, the MACD was already weak. The stochastic was really close to turning down, but it was still good. The stochastic was way down in the 35-ish area. So it just said very, very weak technicals. Therefore, you could have a pullback. It doesn't say major sell signal. It just says be careful. Well, we got that pullback where? To the 200-period moving average. Well, now what we've got is, now let me expand this a little bit. This is Technical Friday, so I want to go through these things. And the reason why I want to do it is because I said to subscribers that by this week, I should have a really good clue as to what we're looking at, and I can start making projections for January, maybe even into February. And I think at Friday at 4 o'clock today, we'll get that. So I'm going to extend this out a little bit. There, that's the daily chart. I'm covering the weekly. You can see the monthly. Look, the monthly has the 9-period moving average just for the first time in a long time, in months, turning L, meaning that the 9, now we're only the 6th day of December. It's only the 3rd, Tuesday, Wednesday, Thursday. It's only the 4th trading day of the month of the year. So I can't project. This L could change to an S or go back to pink at any point. But I'm saying that's a good sign. And the reason why I can't be so bearish, like everyone keeps talking about S&P down to the 34, 32, 2800 level. At this particular point, I can't put that in my mind because I don't see the strength yet to break out in the Dow, the S&P, any of the indices. But so much work has been done to the downside and so much negativism is there. I don't see it yet. It could come later. So what we've got here is, let me expand this here as we go into the break, and then I'm going to get to a lot of things, the stuff that I wanted to talk about. I want to talk about in the Chapman way with regard to what do we do for the opening call subscribers? How do we get into positions? What do we do? So look, you've got a little arch, you've got a lowercase h going to a lowercase m. But this is a rectangle formation. A rectangle formation can last a lot longer than your patience. We'll be back. Dow's up 280.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN. Educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com. Educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
So I just wanted to do this. It's a technical Friday. Look, here's the E-mini walking the 9-period moving average using the 14 as a springboard. And it's gone to a G/C. I could call this just flat out C, but I like to always be a little ahead of the game and say, all right, it looks like it's just an extension. The MACD's been very good. Stochastic is starting to rally. It's at 84%. But this is also where you're getting towards the left side highs. That was in fact resistance before. I didn't have time to do this. Normally what I would do is I'd grab this, I'd make that left side, and I'd say this is the right side right here. Let's see if there's a symmetry between the sequence on the left side to the sequence on the right side, getting back to the high. And lo and behold, there's nothing here I can make up. This is what you see. This is what you get. Excuse me. And look what happened. We went to a peak, G/C, in exactly the same time from the left side midpoint, which is this bar right here, at the gray peak A, because it was under that peak E, at 936. And the price was 38.75. But there's still strength. So I'm saying this isn't an instant restart. This could be a brand new down move right there and a brand new buy signal right there. It might be. But if you're long, this is exactly where if you've got a couple of positions, you want to take a little bit off for money management. Why? Because this is exactly where you start to see the resistance. And that's all it is. It's just short-term, 1-minute chart, short-term resistance. But you've got to look at the weekly chart. You remember I always like to look at time frames. That was a peak A, peak B, and it was like an Eiffel Tower, straight down move, but it held very nicely at the 38.30 level. And there's a good chance, a really good chance, that the MACD and stochastic are strong enough in the 10-minute chart to start a leg C, and that leg C would go 3876.50. That would start leg C. So in that regard, the one chart says, hey, I'm still bullish. Don't get nervous. And the very shorter term, I could go to the 5. I don't want to waste too much time. But you see the way we've taken 3 bars to digest the gains right here. And that's the reason why right here is we get a little nervous. But look at this beautiful symmetry. I can't do I can't use that low as the low. I'm going to where I decided that would be the bar symmetry. So that's the point that I go left side, right side, price time match, and it misses it by about 1.5 points. Well, no, about a point actually, and now it's stalling. So that's the work I like to do. I didn't have a chance to draw anything else, but I would have automatically on this trough right here, I would have drawn a Chapman wave inside wedge target resistance line, and you can see we're still missing it. That was beautiful resistance to show you that's the target resistance line. The target means it goes all the way up to where you got bar symmetry, and the resistance says that should be, well, right now the resistance is up at 38.80. So I wanted to show you some of these techniques. Why? Because it applies exactly to what I'm looking at here in the Dow. And my thinking here is that from this peak A, now this is a gray B, gray because it's still, I don't have any signals. The MACD hasn't turned positive. Stochastic still only at 35%. So that's a B. But normally I change the color to say gray. When you get blue, it means I should go to at least a D. That's like a buy signal upgrade to a buy mode. So this is stuck in a range. And my thinking was we would get to a little bit higher high, maybe a leg C, and then we get a pullback. Would I pull the trigger and say, let's go short? No, I think that this is in a consolidation phase. Not yet. If it goes to a D above 33,000, say 380, and it looks like it's weakening because we haven't got the technicals confirming the strength, then we could have a sharp pullback and go all the way back to 32,700. Not there yet. Still long, core long from way back, long here, right there at 30,000. We're at 33,292. So we have trading positions as well. So that just wanted to show you what's going on. Stuck in a range. It looks fantastic. But look at the weekly chart. Holding the 14-period moving average, the black line. Holding the green, but can't really push much further than the 9-period exponential moving average. But the inside track propellant zone is still working, but it's a real struggle. So that's how I just want to give you an analysis there. Let's run a couple of things here. S&P to give you support levels. 38.52 was the high today. Between 38.52 and 38.58 should be some kind of resistance. If we get to the 38.78 area, that'll start a leg C, and that'll be quite positive, but it's still stuck in a range. Looking at the QQQ, and for each one of these, if it takes out today's low, by the end of the day, that's going to be a big negative, at least in the very near term, and you've got yourself a trough on the QQQ on the 28th at 259.73. So, and the low today is 260.34. So far, it's really struggling. IWM, the same thing. I wanted to go to gold. Yeah, IWM, leg B goes to a peak B. Actually, I'm watching the Russell 2000 because that monthly chart, the technicals, the histogram in the monthly chart has started to improve a little bit. The stochastic's terrible at 21%, and the weekly chart says that inside track repellent zone, it's still in place, but the whole thing about this is, do we get a rotation? And that's kind of what I'm thinking here, that we're in for a surprise, that there could be a rotation in the first 6 to 8 weeks of the year, and that's where we're going to see whether or not small caps become favorable again. And there are a couple of reasons why that's a possibility. I'm not ignoring it. So the IWM, it's got a lot of work to do, but so far it's really, the MACD's turned up, the stochastic's improving, on balance volume is terrible, 9 periods still under the 14. Let's go to gold. Gold is trading at, whoa, big move up, 25 points at 1866. Really nice move. That confirms this leg C. This is, now I can change that to a buy, to an up B. This is in a buy mode in the weekly chart. Went from a buy signal to a buy mode. Let's just get rid of that and change it to an up arrow. Right then, that says that the GDX, the gold contract should go to a D. Doesn't say when, it just says it should do that. And in the meantime, back at the ranch, what we are looking at is these three almost symmetry in terms of time, lows that remained slightly fractional lows, went into the inside track, propellant zone, and look how nicely it's doing. And that weekly chart finally has started to improve. Let's look at silver. Oh, there's a lot to do, and I'm getting questions. I wanted to do a bunch of things. The SI. Now, remember what I said, that the gold chart lagged and lagged and lagged because the silver chart was so strong. There's a chance that what happens is gold suddenly picks it up and says, oh my God, what am I doing here? I'm supposed to be leading, and I've been lagging. I better catch up to silver. And then what happens is silver stalls a little bit, and the gold contract catches up. And then at that moment, you've got to be a little careful because both of them become a little vulnerable. We're not there yet, but that's what I'm watching for. Let me just go backwards. Peaky wants to know about TGB. I'll just do that because that just came to my eye, and I wanted to go to high-grade copper. So there we go. So TGB is Taseko Mines, fabulous move up today, up 8.7%, up 14 cents at 168. This is E/V, a brand new move to the upside. And look at that weekly chart. I'll be back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi folks, so TGB, as I say, Taseko Mines doing very well. It's up 13 cents at 167. I've got this as a leg E in the weekly, a leg E in the daily, and a leg B in the monthly chart. It makes the 153 to 146 area really strong support that needs to hold. It should hold on any pullback, so that's good because high-grade copper is moving very sharply higher from the low that was made 3 days ago at the 50-period moving average. Now it's nicely above the 200-period moving average. It needs to continue this move away from 3.82, and it's at 3.87 right now. Very nice action, but it's all within the rectangle formation. We'll see if it can break out. Look, a question came in about XLE. XLE is trading very nicely high. This is going to be a leg C. Yeah, leg C. Yep, a leg C. it's in that rectangle formation. It is just, this is what you want to see in the Dow. If it's able to do that, break above that resistance in the 33,400s. So the XLE at 88.28. That was a pretty big pullback from 94 to 82. I'd say 12 points. 12, 13% on the pullback. But now it's acting quite well. It's within the rectangle and it's moving higher. Can it close in the 89.30 area by Monday? If it does that, that's going to be very important because it can tackle that very ugly candle that was a candle around 1st of December from the 92 down to the 87 area, that one candle that wants to get into that. So that's very important. RIG came up as a question. RIG is breaking out here. It's up 39 cents, 8.37% at 4.99. This has gone right to the left side. Oh, I've drawn this in for subscribers, and we got out of it. Some people have kept it because they really liked it. Congratulations there. And look, the left side, right side price time match that I had was to go to last week or the week before at the high of 5.01. And today it's hitting $5. So isn't that nice? Look at that. Very good actions helping the monthly chart. So these, this is Transocean, I believe, deep water drilling, really doing very, very well. Next question I had was, is this going to be the time for stocks like Mosaic, M-O-S, right there, Mosaic, to start rallying? I was watching this very closely, and how it made a low over the past 2 or 3 sessions was going to be really important to me. Thanks for pointing it out because I did not actually see this. It happened early this morning. There was a gap up from the little V-shaped pattern that was trying to form yesterday. Yes, so this Mosaic at 46.76, it's really risky based on the weekly chart and the monthly chart. But the only way you can trade something like this is if there is a powerful kickoff with the technicals confirming. And in this particular case, I have to wait for about a day or two to say the technicals are confirming, but they are rallying. So at 46.76, I would say start your engines. Just put your foot in the door here at 46.74. I would have a stop at this particular point. You just have to, because you're starting a position, you have to have a slightly wider stop. So I'd have a stop of about 2 points. It was CF or Mosaic. So CF is CF Industries. Slightly, did I go to the wrong place? Type that in. Right, let me just, oh, it did. Right there. So this is a leg A in Mosaic. It's just a start. I have to make it a gray. I haven't got time, but that's really a gray A. And CF Industries is just, it's an ugly chart. This is a little different. This is CF Industries, and you're kind of in a different area because you're in hydrogen, nitrogen products, clean energy, fertilizer, emissions abatement. I mean, a broader area, I should say, than Mosaic. Mosaic is in, did I type that in? Mosaic. The Mosaic company is called is potash, phosphates, and fertilizers. A little bit more specific, but I think the CF, if I was to choose a chart between the two of them, I would probably choose Mosaic right now just because it hasn't pulled back as much and it's acting a little bit better. It's had three days of a good rally, and this is at 85.42. But yes, it's also trying. I'd be a little more cautious here. I just nibble at 85.47, and I'd have to have a 3-point stop. Hope that helps you. Next question came in. Yeah, Caterpillar mentioned in Tiger YouTube. Fabulous action. So this is another reason why I'm saying, how can this be a major recession coming about when you've got Caterpillar, heavy-duty equipment, deep cyclicals are making a new, not yet an all-time high, 246.69. Today's high is 246.16. How about that, huh? Not bad. So Caterpillar is acting so well in leg D, out of the rectangle formation, going to the upside. We've got to be careful because sometimes in the rectangle formation, it just pops out to a leg D above the rectangle high. Then if it comes back at any point, if Caterpillar closes below 233, it's at 245.90 right now, closes below 233, be careful because it could retest the low that was made in the 220s. Be careful. And it is a leg B in the weekly chart. It's still looking really good. Next question came in. Am I looking at this? Okay. So I want to do a couple of things. I'm going to skip some of those things that I had written down. So for subscribers to my opening call, I just want to go through a couple of things. When we start a position, it's a starter position that has you as making the choice of how many shares you want to buy. But I always recommend that I'm looking at a portfolio and that I'm not recommending just one stock. And that's the stock that you get out of all the different stocks that I have. I prefer if you can have an amalgam, especially in different areas. So I say small, it means that's a small position is a small position. If I say starter position, it means you're going in, maybe not with the full amount, but you're getting in substantially. And the number of shares is really up to you. It depends on the capital available. And number one is, I like to think of it as always having cash ready. No matter how many positions we have, you still want to be able to have cash ready. You never know when that sudden decline occurs or spike, and you say, okay, this is where I want to short or protect my portfolio. Small implies it's less than the starting position, and that there's a good chance that if it works, we're going to add to it at some point. That's the way we look at it. Sometimes we've got a stock 3 days ago. I want you to get in. We tried to get in yesterday, just missed it, and it went up. But I because it was already making highs, not all-time highs, but recovery highs, it was real tough. So what I tried to do in a position like that, and I failed to do it the way I like to do it, only because I was expecting there should be some pullback, which there was, but it was only minor. I go for a split position. One says I'm getting in right now, and the other is because I'm not getting the full position, I'm going to get in, but quite a bit lower down. In case there is a sharp decline, I want to get in a little lower down. I'm splitting the position because if, in fact, when I get in, I don't know because the market has to still open, or at least from the moment I say get in, could be pre-market. It could have a sharp pullback. So I always give numbers, etc. So I'm very specific. In this particular case, I really should have said, I want to get in. We're going to split the position. Just grab it under a certain level, not even though it should have been under the previous day's high. So now we've missed it, and it's doing fantastic. And it's in an area that the dividend stocks, maybe there's a rotation into other types of dividend stocks, and these could give capital gain and dividend. I'll figure out what to do coming up Monday. It'll be a little higher than what we wanted. But anyway, we'll have to deal with that. So sometimes we miss it and sometimes we get it. I also put in tight stops. For instance, we got stopped out of a uranium stock that we had fabulous intra-week after we got it again. We took a little bit off and a little bit off. And then the final one was a break-even trade. And it pulled back, and today it's up very nicely. Do I get back in? I'm not afraid to go right back in. I'll have to do an assessment. And I did say we would be getting back in, but maybe I have to wait. We'll see. And when I say take a tad, let's say you have 100 or whatever it is, the tad means take 8 or 10, 12 off. 100 shares, take 10 or just take a little bit off to reward yourself. That's money management.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So remember we were talking about this, I completely forgot to mention this. It was right on my mind, and then of course there were so many questions coming in. I considered that this was a chance of a 2-click session. What's a 2-click session? On that pullback after 9 o'clock, going to the 9:45-ish low at about 38.30, you could have got in as it crossed the 9-period moving average, crossed positive at about 10 o'clock. It went green, and it's still green. This is the 1-minute chart. Even on that pullback over there at about 10:30, it didn't change color. But that's the 1-minute chart. But you remember what I said, that the 10-minute chart had made a peak B, and there was a really good chance that this could be a leg C, and now it is a very strong leg C. Well, if this is a buy mode in the 10-minute chart, it should go to, over the period of the next hour or two, it should go to at least a D. And as long as that 9 is over the 14, it could be a 2-click session that you get out when it crosses negative, or you use a different time frame, or you got a price point, or you just say, hey, I'm going out to play tennis or something like that. I want to get out, or I'm raising my stop, and you put your stop at a certain level. 2-click session. Okay, so I've had to skip a whole bunch of things that I wanted to do. What I did want to show you is this. I saw a stock recently, and I thought, what a strange name, symbol to give your stock. And the stock symbol was, I don't know what it is, was FATE, F-A-T-E. Well, FATE is down 61% today at $4.18, down 6.82. What is it called? It's called FATE Therapeutics. Something didn't work. Whew, wow. So within that context, I'm just going to say to you, sometimes those symbols really mean what they say. All right. Another thing is that I'm looking at is within the context of, say, let's just look at TJ Maxx, TJX, in a leg D made a beautiful cup formation. A leg D in the daily chart, I must change it. It doesn't happen automatically. Every single notation that you see, every single one of the thousands of charts you see, I've done the notation. Doesn't take very long at all. I just do it. Blah, blah, blah. And now we're looking at, is this an F or is this an instant restart? Chapman Wave instant restart from the high that was made at 72.99 on the week of the 28th of October, and 72. Mistake. No, it wasn't an instant restart. I always have to go through. I was looking at that and I said, what did I see that was, no, this is leg E. So this is a leg E in the weekly chart at new highs. This is really important. And this is another reason why I'm saying, so let me just, no, I'm going to do that on Monday, probably on Monday. What I've been talking about for some time is rolling corrections. Rolling corrections are really absolutely important. They're important because within the context of correcting, either on the upside or the downside, a rotation takes place when sometimes I get someone either jokes or mocks me or something, says, "Oh, you keep talking about rotation." Yeah, because I recognized in the summer of 2010 when we went long the day of March the 6th in the diamonds, the very day of the low in 2009. I said we did not get that reversal, the dreaded H pattern to retest, which you often get, and you didn't get it 6 months later, which is also what you often get. And then in 2010, that summer, you remember we had this correction, but some stocks that had moved up huge, and they pulled back, and other stocks then took their place that were weak. And that said, you don't have to remember. I learned this from, I must check it out. I think it was General Foods or something like that in the Dow back in 1984, something like that, 86, where I had a sell signal, and the market, the Dow, actually held up for months until it broke to the upside. And the reason was this one stock, which was being heralded as a takeover, and there were other bids coming in, kept the Dow up all the way through the rotation. I don't want to take time now, but I always think of it as the ocean. You know, if you surf, there are certain waves that just work out fantastic. Then those double waves, the waves that overlap the other, and you think, oh my God, this is going to be a huge one. But in fact, it dissipates because the two are conflicting momentums, so it doesn't get as powerful. So that's what I'm looking at right here. And I'm thinking that if every one of the negative aspects of the economy keep having pullbacks that get met with buying from other areas, like a caterpillar in the cyclicals, let's look at the SLX right now. The SLX, someone mentioned a steel stock. Look at that. What a nice bounce. In fact, it turns out that it could be some form, almost a form of an island reversal. That's the Van Eck Vector Steel ETF. I don't want to fight these things. If cyclicals are doing well, and sometimes they're the late comers to a market correction, I still don't want to be saying that this is a huge smash to the downside. I think that we are looking at a rotation that's going on. It's already a year. Hey, everything that should have been done has been done. I think there's a big rally before we have another big test. And that's the way we could have it. We can have a rotational correction until the Fed gets it right. And you are seeing layoffs, etc. I don't want to go into that. Let's just get back to the market. So the question is DBA. We are still along the DBA. That is, look at that Eiffel Tower, straight up, straight down. We're along from the 1370s 4 years ago or so. It's already gone to the 23 area, May of 2022, and then it came all the way back down to 19. It's a big pullback. Now it's in this big rectangle sideways pattern. So that says to me that if you've got wheat pulling back from a peak D right at the resistance, if you've got soybeans coming back, I think the whole idea of deflation unfolding as all this is going on, and it's really hard to get inflation back in the box once it's out, but you can get some kind of amelioration of the percentage increase by having areas like the grain start to pull back. I'm just mentioning this as the whole thing of rotation. All right, I want to get back to the market. What did I write down? I want to go through today and say, so another thing that I do for subscribers is I say TAD. A TAD means you take a little bit off money management, etc., or you put it back on just to get back what you took off. I have fairly tight stops. One of the reasons is that when we really have successes, and we always, every year, we have some really big winners, those winners more than make up for the little nagging losses. But in a case like the one that we just did not get into, because that was a mistake. I should have said that we want the first position. That's why I'm splitting it. I should have been able to pay up for it because it's already about 1.5 points, 2 points high at 42.55. This stock is already 2 points higher than where I initially wanted it as a split. Now I have to deal with that. That was a mistake. It happens once in a while. Core positions means like we're down. We've still got the core position from 2020, the low of March the 23rd. Core position in the diamonds. We also have the 3 times long Dow. And those are core positions. We trade around core positions very often. We even have the SPX, the short position from August, even as we had the diamonds long. That's two different mentalities. One says long-term, the other says shorter-term. And any new positions, I always have a little bit wider stop initially, and then I tighten the stop. I'll be back. The Dow's at 520, very nice. I'll be back for the wrap-up, and then tomorrow I'll do my Saturday market overview for subscribers, and it's going to be very interesting. We've got a lot of potential buys coming up.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month and try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Also, Fate. We've done with Fate. CLF is Cleveland Cliffs Inc., Fat Roll Steel, and Iron Ore Pellets. It took over AK Steel, one that we used to have. Acting really well. It's finally over the 9-period moving average at 18.65. I was asked about that. Could I show it? So let me just do this as a quick summation. I think I covered, I skipped a bunch of stuff that I wanted to do because I wanted to show some round numbers and all sorts of things like that. Not important. I wanted to draw trend lines. I'll do that maybe Monday. But what I wanted to show is that there are areas that are really starting to work, but we have to see whether or not, let me go to this right now so that we can wrap up looking at what's ahead for next, starting to look at what's ahead for next week. So here we are at 33,442. Does this rectangle turn into a really is this excitement that we're looking at today just a 1-day or 2-day thing, and then we start to come back into the rectangle, or is this the breakout? This is really important because if the MACD, which is now still negative, if it crosses positive by Monday or Tuesday, then we could start to move much higher. Look how it's holding the 9-period moving average. Reason why we wanted to get into the Dow. This is already a leg C, a gray leg C, still gray, funnily enough, in the daily chart. So you can't just rally on one stock, on one index, which is the Dow 30. But I like the fact that it's going. But will it hold or will it be reversed? Seen this before in rectangle formations. It goes right to the door. The door stays shut and it reverses and goes back down. So this is really important. We'll be able to raise the stop on our 3 times long Dow that we got into early this morning. It's up about 3 or 4% already. That we'll see what happens. The day's young, but that's what we're looking at. And I'm only looking at the Dow right this moment. But at the same time, I have to consider that the SLX is moving very well. This is a cyclical. How do you get a big recession when you're getting rallies at this particular time? So those are the questions I have. I like the action right now. That's all I can say. And if we close strongly, if we close more than 350 points higher, that's going to be important. Then if we close at the high of the day, that's going to be important. Very short term on the 1 minute chart. Look, we just made a little bit of a top with a